Today is Monday, December 13th. This is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, starting with the grain markets this morning, corn, wheat, and soybean futures were not able to trade over resistance last week. Why, and what do you think prices will do now?
Well, I think USDA's December report was disappointing, especially to the corn bulls, and also they raised world wheat production. So I think the market decided that without any additional news, they wanted to take profits from their positions going into the end of the year. Then over the weekend, rains in Argentina and southern Brazil were better than expected, which is causing long liquidation in the soybean meal, and soybean oil markets.
Steve, what's the latest news about U.S. relations with Russia and China and the impact on demand and then, of course, prices?
Well, there's not a lot of definitive news out there as far as U.S. and Russia and Ukraine. The President of the United States drew a red line and would increase sanctions against Russia if they invaded Ukraine. Ukraine is the second largest exporter of corn. They're also a big exporter of wheat. So if there was an invasion, I think those markets would trade sharply higher. Russia also is a number two exporter of wheat in the world. And the fact that their prices have gone down over the last week or so has weighed on the wheat market. So any Russian retaliation by the Western world would probably cause wheat to rally. As far as China is concerned, China is lagging its soybean buying from the U.S. I don't know if that's because of the U.S. relations at all-time low versus China, but they are buying more soybeans from South America. They're continuing to expect to import 100 million tons of beans, but right now that import could be down for the U.S., and I think that's weighing on the soybean market. So any conflict between U.S. and China because of Taiwan or human rights probably will be bearish to the soybean market.
Finally, Steve, what's the latest net fund position, and do you think that talk of inflation will help grain prices?
I think the talk of inflation has helped the market, especially in the corn. But we've seen the funds. They were long 250,000 contracts of beans. Now they're long only 37. They're long 110,000 oil. They're long now only 50. They were long 400,000 contracts of corn. They're now only long 300. They were long 60,000 Kansas City wheat, which was a record high. Now they're down to only 40,000. During that time frame, open interest has dropped 100,000 contracts in beans, 150 in corn, and 20 in Kansas City wheat. And usually, a drop in open interest is sometimes considered a bearish bias, just like an increase in open interest would be a bullish bias. So we need to trade over last week's highs in order to bring funds back to the long side. But I do think down the road, inflation, tighter world supplies, weather in 2022 will push grain prices higher from here.
Thanks, Steve. Alan, Wednesday is the conclusion of the Federal Open Market Committee's policy meeting. What can we expect from them?
Well, I think from the Fed, it is widely expected that they will probably keep the Fed funds rate unchanged at 0 to 25 basis points. But the main topic and the main question, I believe, is whether the Fed will decide to accelerate the taper. They're already at $10 billion a month of tapering, and they've hinted very strongly that there could be an increase in the taper, possibly at $15 billion a month. That would set the stage then for the Fed raising rates either at the June or July meetings. So everyone right now is focusing on Fed policy, and so it's the taper that we're looking for to be accelerated at the conclusion of that meeting.
Tomorrow, we're expecting the Producer Price Index report. What's the estimate, and what kind of action might we see if we have any surprises, Alan?
Okay, well, first of all, on Friday we had the consumer price index coming in much higher than expected at 6.8%. But tomorrow's producer price index could even be a larger number. Talk is that it could be up 9.2% on an annualized basis, and that would be up 8.6 from 8.6% in the previous month. So with the focus on inflation, I think that is likely to be a negative near term on stock index futures, as I think the meeting in general is likely to be somewhat of a negative influence on stock index futures overall, at least up until that meeting.
Finally, Alan, stock indexes you mentioned, they continue to see volatile trade. We're down today. What's your outlook for the stock index futures this week and let's say moving into the end of the year?
Okay, between now and the Fed meeting, and in fact, I should be more specific, between now and the statement on Wednesday from the Fed meeting, I think we can see this market under some pressure as traders focusing on just how much accommodation will be withdrawn from policy. So I would look for sideways lower from today's level, Tuesday, and in advance of the Wednesday meeting. However, once that meeting is out of the way, traders will probably remember that we do have quite a bit of stimulus around the world, and even with an accelerated taper, there was still plenty of accommodation. So basically, I'm looking for lower in advance of the statement, and then once that statement is out of the way, I think we can see higher prices in the end of the week and probably higher prices into the balance of this year. Don't forget that the seasonal is still up in December. I do not expect this month to be an exception.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.